there's 100 seats. There are only 15 seats available left. That's it. And I can't let anybody else in the webinar. It won't even let me extend the seats. So the webinar closes out at 100 attendees, and there are only 15 seats left in that registry. And I think a couple of days ago, I posted in my stories like a little screenshot of the amount of tickets sold. So I'll do it again when this live is over to show you guys. If you think I'm joking, I'm not. The tickets are almost sold out, which I'm really excited about because it means a lot of people are going to be learning the true foundation of the stock market, opposed to somebody coming in connected to a network marketing company or whatever and just trying to sell you hopes and dreams to get you to sign up for something. This is going to be a genuine look inside of the market. So I'm also going to be showing you one of my self-managed portfolios, because what a lot of you will be doing is opening up self-managed portfolios. And if you don't know how to read it, you don't know when's the proper time to get in and out of the market, if you don't know it and you've never seen it before, when you open up your own portfolio, even if you take a class and you open up your own portfolio, it's going to look like a foreign language to you. So to just nip that in the bud, I'll be going into one of my self-managed portfolios. I'm going to show you guys all the ins and out of it, with the exception of like my account information. And I'll show you the stocks that are performing well. I'll show you the ones that aren't. I'll show you all of the nitty and the gritty inside of it, okay? To give you guys that real world look. So the class is only $39.99. I could have made it more expensive, but I chose not to, because I know that a lot of people are trying to figure out how they can begin to build wealth. And if you don't know, investing a large amount, it's I would rather you put that money in the market. So $39.99 is the cost of the class. It's the link in my bio. You can just click on the class. It's like a photo of the class, and then you can register from there. Okay, so it's been a few days since I've talked to you guys. Oh my gosh. All right. And there's over 100 of you guys streaming from Instagram, and I got people streaming on other platforms too. So let's talk about this. I was reading an article today about Amazon and Apple, and it was suggesting how both Amazon and Apple are moving more so into the streaming space. So they're not really doing away with any of their services. If you haven't heard, Amazon is starting to tailor back on their Amazon Prime, which has a lot of people kind of finicky, because they're like, that's the reason why we use you, is because you're going to deliver next day or 2-day delivery. But I don't really think Amazon is worried about it, because they've really been diversifying their assets, and so has Apple. So both of them have invested over $2 billion into streaming services. Now, I know we're familiar with Amazon Prime TV, right? However, Amazon has invested over $11 billion trying to move more so into the streaming services when it comes to sports, and Apple has moved into streaming services when it comes to football. So I don't really think they're concerned about people being upset that they're doing away with this 2-day delivery, because they're diversifying where their asset allocation is as far as their business is concerned. So when I'm looking at these two companies, and I was just kind of reading further, and I was like, dang, I wonder how many people are consumers of both of these companies, but yet don't own any ownership of them. And so, do y'all know Apple stock is only $137 a share, right? Y'all know that. And Apple is only $164 a share. And the average consumer who has Amazon Prime spends $1,400 a year purchasing products with Amazon Prime, but the shares of the company are only $137 a share. So if you use Amazon Prime, raise your hand, like put something in the chat, like, yeah, girl, that's me. But then I want to know, do you also have ownership of the company? Because these are things that we have to start moving into. Where we have to get to the place to where, if we're holding something that costs hundreds of dollars and we're not owning part of the company, we have to start changing that mindset, right? Even if you just take a piece of paper and you're walking around your house and you're like, dang, we have 4 Roku TVs in this house, but you don't have any shares of Roku, the company. There's a problem with that, right? If everybody in your house uses Colgate and you don't own any shares of the company, we have an issue. If you only use one brand of toilet paper, and that's what you've been buying month over month or bi-weekly for years, but you have zero ownership of the company, the conversation has to change. So this is something that you can even do with your kids. I hear people say this all the time, like, how can I start getting my kids interested in financial literacy and investing? This is one of the things that you can do, because the next time you get ready to go buy your child something, and you know that whatever they suggest, mom, can I have some Robux, or can I don't know, get some more fidgets? How many times have we bought fidgets for our kids, but you're not looking at who owns the fidget companies, or who's the ones that are producing them, or mass producing them and investing in them? So say, baby, yes, we can buy these things, but let's also, how about we own the company too? And then they'll get excited because they're like, oh, so when people buy them, I'm making money. Just talk to them. They understand. My 7-year-old, she understands using money to make more money. Okay, Tiffany, I see you just got into class. I'll see you Saturday, sis. So using money to earn more money, kids understand that. And you can make that very real for them with everyday objects. But it's all about opening up the conversation. And if you're not doing the simple things, and very simple things, like saying, okay, we all have Apple computers. We all have Apple watches. We all have iPhones. Over 1 billion people use iPhones. Seldom do I see the same percentage invested in the company. Okay, so we said just enrolled. Ready? Yes, it's going to be fun, sis. We're going to have a good time. So take inventory. If y'all can do this, I'm always giving out homework assignments because I really do care. I want y'all to do this for me, please. Walk up. Oh, yay, humble. And I'm excited for you to be in class. Walk around your house, get a piece of paper, or take out the notes app on your phone, walk around your house, and just start jotting down a list of things that you're a consumer of. And then I want you to put a dash next to it. And then I want you to just hop on your computer or hop on your phone, and I want you to look up the ticker of that company and how much a share of that company is. So jot down the list. Right next to it, you're going to Google the ticker of each of those companies. You're going to Google how much a share of each of those companies are. If you have already been a consumer of whatever company this is for years, it's high time you start to be an investor in it. And so when we say that things are risky in the market, things that are considered evergreen, quote unquote, in the market are things that are companies that have been around for years, that have a large amount of cash flow, who have high valuations. Amazon's valuation is over 1 trillion. Apple's valuation is over 2 trillion. These companies have bank to move. Okay. And so if you're going to get into investing into these type of companies, I want to caution you as well with the type of broker that you choose to use. So these are one of the things that I'm going to go over in class, is the type of brokers that you should be using, and why or why not I'm favorable over some than others. So I definitely am not a fan of Robinhood. Y'all should know that by looking at my page. I will never recommend anybody use Robinhood. Now, granted, there are some people who say Robinhood has worked well for them. They have never ran into any issues with Robinhood. On the flip side of that, I have a full Google Doc about why Robinhood is just the ghetto when it comes to brokerage firms. Okay. So between their issues with the SEC, between different issues that people have run into with their margins not being called, and different issues when before their whole cryptocurrency platform was reevaluated, Robinhood was just, and in my opinion, will continue to just not be a reputable brokerage firm that you should go through. And most people do not know that Robinhood is a third party. Most people don't know that. Most people don't know that when you say, I want to go buy shares of, let's just say, I saw somebody say AMC. So let's talk about AMC and GameStop for a second. Both of these companies received a strong push, more so off of word of mouth of social media than anything else. So let's say a lot of people went and bought shares from Robinhood. Well, Robinhood will then take that order and place it with the true brokerage firm. So what people were experiencing when the market took its deep hit back in 2020, number one, they bottomed out. They ran out of money to move with the market. And that caused a lot of people problems with logging into their accounts. A lot of people lost a lot of money because the Robinhood no longer had enough money to move with the market at that point in time. So when they were trying to log in to sell their shares, they couldn't because Robinhood had to place that order, that sell order, with the actual brokerage firm. So you had delays. Then you had people being locked out of their accounts. Then you had people not being able to get rid of or dump off their shares when they were trying to dump off their shares. Now, if you were going through a brokerage firm like Fidelity, Charles Schwab, Vanguard, you would not have any issues with this. You would log into your account, you would say, okay, I would like to sell, I would like to purchase, whatever the case may be. You're not going to experience any delays because they are the true brokerage firm that you are taking that investment through. Whereas Robinhood more so takes orders and then goes to place them. So just be very careful when you say you want to get into the investment space. TD Ameritrade is fine. E-Trade is okay. Like, I'm really a fan of Fidelity, Charles Schwab, Vanguard, TD Ameritrade. Okay. Webull, not a big fan of Webull. Webull made cryptocurrency easier for people who were not really familiar with the crypto space, as did Coinbase. But you should really be going to like Binance. You should. Oh yeah, I see you guys. I see you guys booking your classes or booking your ticket for class. That's awesome. You should be going through Binance. A lot of people like crypto.com because of the debit cards that they offer and the different type of yields that you can get off of your cards. But the only thing that I really feel like you should be using Coinbase for is just for their free education. And also with Coinbase, they have an earn as you learn program. So that's helpful because at least you can earn some cryptocurrency as you're learning about it. But I don't think that you should be invested on that particular platform. And Coinbase is running into a lot of problems, a whole lot of problems. So if you're looking for anything reputable on the stock end, definitely Fidelity, definitely Vanguard, definitely Charles Schwab, definitely TD Ameritrade. On the cryptocurrency end, definitely Binance, Kraken. A lot of people like crypto.com, but I would stay away from Coinbase unless you're using that platform to learn because they do have a free educational program. I will kind of caution you away from Webull as well. And I think Bitmart is another one that people have been buying cryptocurrency off of. So just kind of caution you in that space. So to get off of Coinbase, really, okay, so let me talk about Robinhood and I'll go to Coinbase. Robinhood, if you have shares with Robinhood, Robinhood will charge you a $75 fee to move those shares off of their platform. So whether it's partial shares or whole shares, they will put a $75 fee attached to you transferring those shares. Now, Fidelity, Charles Schwab, I believe Vanguard as well, they will reimburse that $75 to you. And what they will also do is transfer the shares out of Robinhood into your new portfolio. So what you have to do is just contact them, open up your portfolio with them, let them know you do have shares with Robinhood, you want them transferred over. Robinhood will attach that fee. They'll move your shares, you hold your investment place, and then you will also they'll reimburse you that $75. Now, with cryptocurrency, I believe Robinhood just updated their cryptocurrency platform. However, initially what Robinhood did was they put a cryptocurrency face on actual dollar value. So let's say you said you wanted to be invested into crypto, into Bitcoin. So they would say, okay, yep, you're buying Bitcoin. What you were actually buying was US dollar value with the face of Bitcoin. So you couldn't transfer it. You couldn't put it on a hot or a cold wallet. The only thing that you could do was sell it for US dollar value. Now they've recently changed that, but I don't trust Robinhood because of all the issues that they've already run into. And if I'm not mistaken, they were just in the news the other day for something else, but I just can't think of it off the top of my head. But if I can pull it, I'm going to add it to my list of things that has as to why I don't care for Robinhood. And if you want them, want that list, what I'll do is I will just share the Google Doc with you because all it is a Google Doc of the articles that I've comprised for you guys. Okay. And then with Coinbase, oh, Angela, you got your seat too. Awesome. With Coinbase, you can move your crypto onto a hot or a cold wallet, but Coinbase is running into a lot of issues just on from a business standpoint with their financials. So if you're going to move your things with crypto with Coinbase, what I would do is I would look to get a wallet as soon as possible. And you can go through Exodus and you can get a wallet through them. is okay. I'm being spammed right now. It's funny. You can go through Exodus and get you a Ledger Nano wallet if you choose to go that route, and then move your crypto onto there and then move it to a different platform if you don't want it to be on the wallet. Okay. But I would definitely look to moving out of it. And I actually have a friend who's in the crypto space very, very heavily. I have a couple of them. So what I may do is I may do a live just highlighting cryptocurrency, and we can talk about it, because I do have a cryptocurrency portfolio. I'm invested into about 13 different cryptos myself, and I've been invested into cryptocurrency since 2016. So that's definitely a conversation I'm open to having. But if you are a consumer of it, you need to be an owner of it. Okay, so ladies, right? This is, the bougie and balance whole thing, right? If you are a consumer of it, who owns the companies that manufacture the eyelashes that we purchase? Who owns the companies that manufacture the wigs that we buy? Okay, who owns them? The makeup that we use. Oftentimes, all we do is use, spend, consume. But where is the proof to say I own what I use? If you don't have it, then some things have to change. They got to change. If you're buying your jewelry from one company year over year, start investing in them. Figure out, because I can tell you from the standpoint of a woman, we spend easily $1,000 plus on ourselves on an annual basis with our nails. Some of us spend over $100 every time we get our nails done, because you're getting a manicure, you're getting a pedicure, you're getting the gel polish, you're getting all of that. Start looking up who is the manufacturer, the owner of these companies, because if you can put it on you, you can start building a wealth portfolio. And when I look at the data, and the data is scary, okay? Because as good as we look, and right now I'm talking to my sisters, as good as we look, we have the net worth of nothing, most of us. As good as we look, a single Black female without a degree has a net worth of $0. And it's so bad that by the time we're 40 or 50, if we have a degree, our net worth, the average net worth, is only $1,000 to $2,000. But we spend that easily going someplace else. We spend that easily going on vacation, easily on hair and makeup and nails, easily. So if we can just make a small decision to say, if I'm a consumer of it, I'm going to be an owner of it, then what will happen is we'll start to change what this picture looks like for us on the financial end. Because I don't care how many degrees we have. I don't care how many businesses we start. I don't care about any of that, because what it shows on the financial side is that as good as we look, as smart as we are, as many businesses that we have, financially, we are struggling. And if y'all don't know the other side of the data, okay, when it comes to just Black people in general, our net worth in 2053 is projected to be $0. So for all of you who may be on the live who attended Invest Fest, it's more than just saying, I want to connect with like-minded people. It's more than just saying, I want to learn from some brilliant people who are speaking, because there's a lot of people who are consumers of information, but don't invest the time into implementing what they have learned. Just like there's a lot of people who are consumers of a product, but don't invest the time to be owners of the product. So we really got to change this whole thought pattern around investing. I need you to be invested into physical things, and I also need you to be invested on the financial end, and I also need to be invested in yourself. Okay? So if you're one of them people that's like, I'm just going to attend all these seminars, I just can't wait to learn. Oh my gosh, I cannot wait to hear so-and-so speak, blah, blah, blah. I'm going to learn so much. And then you go home and you don't do anything with the information. You just invested your money into nothing because it just went to thin air, because now the money's gone. Whatever you thought you learned, you're not implementing. So that was just a waste of your time and money. So if you're going out here in these stores and you're buying all of these products and you're using the makeup, using makeup, throw the makeup away. Use the makeup, throw the makeup away. You're not invested in the company. What are you doing? Okay. All right. That was my little rant on that. But we've got to move into ownership. I just want you to think about that. Every time you buy something, the back end of that conversation needs to be, how can I own? So step number 1, write the list. Walk around your house, sis, open up your makeup bag. All right. Go look at the tag on your wig. See who the company is, the manufacturer is. Find the ticker of the company. Find how much it costs. That's step number 1. Step number 2 is you're going to open up an account with a reputable broker. Reputable broker. If you're doing self-manage, it's a lot easier than doing than having somebody manage your portfolio for you. And the reason why is because if you Mary, I'll see you in classes. If you have someone who's managing your portfolio, at minimum, they're going to ask for anywhere between $10,000 at minimum to $25,000 at minimum to manage that portfolio. You're not paying them that, but that's what they're going to want in that portfolio because they make a percentage off of your portfolio. So if you don't have that kind of money, which is cool, because when I started opening these portfolios, I didn't have that kind of money. So what I did was I opened a self-managed portfolio, which is what many of you have probably tried to do through Robinhood or Cash App, right? But you need to be moving over into the real brokerage firm lane, what I like to call real anyways. So what you're going to do is you're going to contact them. Now, the reason why I like Fidelity the most, and I'm not like paid by them or anything, but the way that they're just so patient with explaining everything. I remember when I first opened up my portfolio with them, or like my profile with them, or my account with them, they stay on the phone with me for 2 hours because I just was like so curious about different things. And they were just so patient and helped me all the way through. Now, if you go through your personal bank, because you can do this as well. So whether you bank with Bank of America, Chase, Wells Fargo, any of the brick and mortar banks, you'll be able to open up a account with them as well. You want to let them know that you want to do a self-managed portfolio. The reason why you want to let them know this is because there's paperwork that you have to fill out, and it takes about 3 days to get the whole process done. And this is actually the one that I'm going to be showing you guys is one of the ones that I have with actual brick and mortar bank. Okay. So when you go through this process, you can say, oh, well, I only have $100, but I know that I want to start investing into different companies. You can find companies that are a part of the NASDAQ whose shares are not above $100. That's what I did when I first started opening that particular portfolio. I looked at the NASDAQ. I broke the NASDAQ down to shares that were below $100 that I knew that I could afford. I went in with my $100 and I started buying shares. And I started buying shares of companies that paid out dividends. Now, granted, if the dividend is pocket change, it's still more than what your money would be if you had it in a savings account. So I hear a lot of people like, oh, it's only pocket change, like 50 cents. Your money can sit in your account a whole year and not make 50 cents on it in a standard savings account because it only has a yield of 0.01%. So if you put it into perspective, right? If you put it into perspective, you can say, okay, well, getting paid 50 cents on a dividend off of this share that I'm invested into, that means that my money, which is growing, is also growing more money on top of the money that is currently growing. Put that into perspective, because if you had that $100 sitting in a standard savings account for a year, seldom would you see 50 cents ever grown on that $100. So you got to put that into perspective. Okay, so I would look for companies that are on the NASDAQ that were less than $100. I would find their tickers. I would start reading about the fundamentals of the companies. So you have to know about fundamental analysis as well as technical analysis of the market. Fundamental analysis is basically going to be your news. Technical analysis is basically going to be anything that consists of like chart markups. Okay. Hey, real quick, who wants to be my, what you call it? Like admin manager person, and can block out all these people being crazy on my live? I need to have somebody do that. I'm gonna have somebody come talk to me, some cop on my live and start blocking these people, because you can do that. You know, you can bring somebody up and they can, a moderator. Thank you, Tiffany. You can have a moderator and they can come in and block all these silly people. So anywho, you need to know your fundamental and technical analysis of the market. So fundamental is going to be anything news related, knowing the amount of cash flow that the company has on hand, the language in which they're speaking, have they been audited, like by a third party, not them just projecting their own numbers, right? Technical analysis on the most simplest platform. Technical analysis can just be broken down into support and resistance. Okay. And understanding how to read that. And then after you get more familiar with technical analysis, then that's when you can start moving into saying, okay, well, I want to use Fibonacci or the Ichimoku cloud, I can't say it, Ichimoku cloud, or you can use different indicators and put that into place. But on the basic fundamental level, understanding support and resistance on the technical analysis side and knowing how far out to look to say, I want to be invested in this particular company for this amount of time period are things that you're going to need to know. Because the thing about a self-managed portfolio is that you've got to know when you're going to get in the market, as well as what your exit strategy is. Because there's a lot of people who invest into individual shares of a company, and they have no idea how long they're going to be invested into it, why they're invested into it, outside of the fact that somebody told them on social media, or outside of the fact that a friend or a family member's invested into it. So they buy it, and people who understand how to read the market are looking and saying, okay, well, based off of past performance, it's looking like a good time to go ahead and grab this share, go ahead and take my profits off of this. This is where my exit strategy is. Now, those who don't know how to read the market, you're going to hold on to it and you're going to watch that baby go you might have taken advantage of a short little pump, and then you're going to watch that baby go all the way down. And now, because you don't have anything else to rely on besides hope, you're going to be hoping that those shares go back up. But one thing that you're going to have to learn, especially when it comes to investing, is that investing is a very emotionalist space. You have to have a strong grab over your emotional intelligence in the market. You cannot hope a stock turns around. You can hope, but it's just going to do what it's going to do, right? We have to go based off of indicators and market analysis. So if you don't know how to do that, you need to be cautious in this space. Now, there's some companies that you can invest into and have a long-term plan and say, you know what? Like, for example, people who invested into Coca-Cola back in the 70s, that was a long-term plan. They're like, you know what? I'm going to invest. I'm going to buy these shares. I'm going to hold them for a long, long, long time. Okay. There's companies you can do that with. Dare I say you can do that with Amazon and Apple. Dare I say. I'll do some more studying, but I'm pretty strong on that thought that you could do that with Amazon and Apple. I think my phone is about to die. Crud. Hold on. Let me switch to my charger. Hold on. I don't want my phone to die. You guys who are, okay. All right. Hey, y'all who are tuning in. All right. I got it back. Okay. So dare I say that Amazon and Apple, maybe those type of companies that you can hold on to for a long period of time and say, I'm going to pull off of these. But what I would strongly suggest is that you look to invest into companies that pay out dividends. Okay. I'm a very big fan of now. Hold on. Let me talk to her real quick. Oh, 210 y'all. Hey. Okay. Listen, let me ask y'all a question. Ladies, would you be with a man that doesn't work? Like, would you be like, yeah, I'm gonna stick beside him? Like, would you be with a man who doesn't work? Please, like, yes or no in the comments. Would you be like, tell me, y'all, would y'all be with a man that doesn't work? I want to know. France said no. Barbie doll said no. Shayna said no. Tomboy said no. Okay, so y'all wouldn't. Somebody on Facebook said heck no. Okay, so y'all in agreement that you wouldn't be with a man that doesn't work. But yet you got Franklin, Jackson, Washington, Grant. You got all of them men sitting in your bank account. You not putting them to work. Really, sis? Really, sis? You got all them men sitting in your bank account and you wouldn't put them to work. You need your money to earn money, but you have to do it in an educated way. Okay? You got to do it in an educated way. So if you don't have the time to study this market, if you don't have the time to really put into understanding how stocks work, because it's not just simply saying I'm going to go open up this random account on my app and I'm just going to go invest my rollover change and all that stuff, because 9 times out of 10, side tangent, 9 times out of 10 when you're investing your rollover change, you end up going back to go get that money because it's not money that you planned on investing anyway. You didn't budget that off to say this is what I can afford to invest. So now you got all this rollover change adding up in this other account, and then because you don't have a budget and now you end up not having any money in your main checking account because most people are living paycheck to paycheck, now you're going off to this side account that you didn't have all this rollover change invested in and pulling that money out. But if you would not be with a man that doesn't work, then stop letting all of those men sit in your bank account and not go to work. Okay? So if you don't know how to do that from an educated standpoint, in the market, what I need you to do is I need you to look into index funds. I need you to look into I bonds. Okay. Index funds, you can look at your look at your budget and say, this is what I can afford to do month over month. Gwendolyn, I'll see you in class, sis. You can look at your budget and say, this is what I can afford a month over month. You can put that into an index fund. Let's just say, for example, the S&P 500 has an annual average return of 10.5%. So that's beating out inflation. Definitely beating out anything a savings account can do, whether it's a high yield savings account or not. And you can do that month over month and let the years add up. And then you're going to turn around and say, my, oh my, look what I've accomplished by investing low risk, high reward over time. But because we're on social media, we're attracted to high risk, high reward because we're on social media. Okay, because we see everybody else, thousands of dollars they're posting that they're earning off of these day trading and off of these stocks and stuff. So what we naturally want to do is have those same results. So it's attractive to us. But if you're chasing everything that glitters, you'll soon find out that it's not gold, because the people who are profiting in those markets are people who understand the market. Okay, so index funds or I bonds. I bonds currently have a return of 9.62%. They will be changing and reevaluating that number at the end of September, early October. So if you're going to lock that in, you can go through the U.S. Treasury. And they'll have something that you need to get signed. You can take it to your bank. Anybody who has a medallion, they can sign off on that document. You may need to make an appointment to get that done. Some banks you can walk into and have them sign off on it, but a regular banker can't do it. It has to be somebody who has a medallion. 9 times out of 10, it's going to be your branch manager. Okay. EE bonds for people who have children. All people who have children out there. EE bonds are great as well because you can get an EE bond when your child is young. Now, granted, their initial rated returns are not that great with EE bonds, especially in comparison to where I bonds return is right now. However, if you have the EE bond for 20 years, whatever you put in that bond automatically doubles. So let's say you bought a new bond for your child every single year. You're like, you know what? I have a separate savings account. I have an account, let's just say Ally, their high yield savings account. I have a bucket set aside for my baby. And so every month I'm putting this in here. And then at the end of the year, I'm going to take this $500 and I'm going to go put this into an EE bond. And I'm going to go and make sure that I have a safe, or I have a safe at the bank to where I can put that in there. And then year over year, I'm doing this. And then by the time my child hits 20, 21, 22, 23, those $500 EE bonds are now $1,000 each. So now you have a gift to give your child to say, hey, use this for college, or use this as a down payment on your home, or use this for whatever the case may be. And so now they have $20,000+ that they can use that you've secured in EE bonds, because at the 20-year mark, they automatically double. We have to think strategically around our money. My oldest is on the call. Hey, boo. My 15-year-old is on the call. So This is how we create wealthy children, wealthy generations. It's by doing it strategically. Okay? Strategic wealth. But it all starts with making some simple decisions around your money. So when you're making these simple decisions around your money, I want you to ask yourself, what am I a consumer of, and how can I be an owner of it? And if the process of learning about stocks is just too much for you, because anything that's going to grow your money is going to take you time to study, with the exception of index funds and I bonds, those are just setting them up. But that is low risk, high reward over time, wealth built over time. With the I bond, you're going to have that money locked away for a minimum of a year. Anytime you take that money out before the 5-year mark, you're going to lose 3 months of interest off of that I bond, 3 months of the growth off of that I bond. So just know that if you're trying to get your money doubled and all this stuff in quicker than a year, then low risk, high reward is not going to be the option for you. But if you can take the time to study these things, you can make some very strategic decisions around the market and position yourself how I position myself. Because what I do is I built my one of my portfolios, one I'm going to show y'all in class. What I did was I strategically invested into stocks that paid out dividends, and then I used my dividends to purchase more shares of other companies or more shares of companies that I'm already owner of. Just using my money, circulating. Once you learn the game that the wealthy people play and you make it fun, it's over. And while I'm not a millionaire yet, I'm doing all the right things that millionaires do. So it's not without a doubt in my mind that millionaire is not within reach. Because I came from, let's not get ahead of ourselves, I came from literally having closed out bank accounts at the bank that I then ended up working for because I owed them money and couldn't pay it. And the only bank that would take me was Best Bank inside of Kroger. Okay? That's where I came from. Literally at the bottom. Literally staying in my best friend's house with only containers to put our clothes in and our mattresses. So I'm very proud that I was able to accomplish this all from 2016 as far as investing is concerned to now. So it's not impossible. You just have to start changing your mindset around money and moving more strategically. And some of those conversations can start with, what am I a consumer of? Okay. And how can I become an owner of it? And once you start changing your mindset around money, your thought processes around money, everything shifts. That's exactly literally what I talk about in my book. Literally. The book that I have pinned here in the live, you guys, that book is about your personal relationship with money. Understanding why you operate with money the way that you do, identifying your triggers around money, how to create healthy boundaries. I can't talk. Understanding your triggers around money, how to create healthy boundaries around those triggers so that when you get to the money, it all makes sense. And you're not doing this continual 2 steps forward to take 5 steps back cycle. You've got real world experience from somebody who not only had to live through it, but sat with people and built budgets for them and helped them get through their financial things because I went through it myself. So the book is great. It's helped a lot of people. I'm so grateful that it has all 5-star reviews. If somebody's petty and wants to buy it to give a 1-star review, God bless you. I don't have time for that. But the book has helped a lot of people. Okay, so let's see. Can you pin it again? Nothing is pinned. It should be at the very bottom of my book. You should see it at the very bottom of the thing. I'll do it again. There. Can you see it now? I just pinned it. Okay, so YouTube. Oh, hey, YouTube. Oh my gosh. Hi, YouTube. S&P 500. I see you. How do regular saving bonds work? I have a few, my child, and hid them since birth, and now he's 21 years old. So what is your regular savings bond, sis? What's the actual title of it? You know that? No, I don't speak Arabic, but I do think the language is absolutely beautiful. Okay, so that's gonna wrap it up for today, you guys. I'm getting ready to go tuck my babies into bed. I already cooked them dinner. We had a yummy homemade chicken pasta that I made the heavy whipping cream, sauce, some seasoning cheeses, so good. So I'm about to get ready to tuck my babies in for the night. You guys, I just did a reel on this talking about if you're a consumer of it, you need to be an owner of it. So please go and like it, give it a comment and a share. I would greatly appreciate it. Thank y'all for hanging out with me today. 240 of you. Oh, before you go, I have a gift for hanging out with me. Don't go. I have a gift. So yes, of course. Hi, YouTube. Yes, of course. So here's your gift. You guys know I'm always trying to do some sort of resource. Okay. So I gave away Grant Cardone's 10X book, the PDF. It wasn't anything I was selling. I wasn't collecting any information. If you messaged me and you said, hey, sis, send me the book, I sent you the book. I have an entire resource vault that has Rich Dad, Poor Dad in there, Millionaire Success Habits, the Intelligent Investor, Bitcoin Standard, Dave Ramsey's book is in there, I believe, and Tony Robbins' book is in there. So that's all free. Now, if you go that route with the finance templates and stuff, you will have to put your email in. However, if you want the book that I'm reading right now, which is, where did it go? Oh, it's in my workout bag. I'm reading Good to Great right now. So it talks about taking yourself from just like functioning in everyday life to moving into your true design, purpose, and greatness. So whether you're trying to move up in the corporate world or if you're an entrepreneur and you're trying to move up in that, that's the current book that I'm reading right now. And it is really, really good about guiding your thought process around what it takes to go from a good person at your job to a great person at your job, or a good business owner to a great business owner. And it really makes you look at things differently. If y'all want that book, absolutely free. I'm not taking any emails or anything like that. I'm literally just going to send you the PDF. Message me on my DM and I will send it to you, but it has to be through Instagram. Everybody who's streaming, it has to be through Instagram. So message me and I will send you the Google PDF for that book, and you guys get to reading it and let me know, please, how you grow from reading it. Okay. All right, y'all. Until next time, I will talk to you later. Bye.